Powell's going to try to threaten the market and cause some negative action. CPI data came out and it wasn't the best. XRP, XLM price action looks like more pumps and dumps. So have some fun. Get to that crypto news, everyone. Continuing with the theme of this morning, boy, was that live stream fun. I will have it linked at the end. And oh my gosh, the Senator Warren joke. And then all of a sudden we have technical difficulties. And then I could still access you guys on the chat even though my whole system was shut down. That was weird. Conrad Allwood dropping some support for the channel. And by the way, thank you to Trick along with Jeremy Touche for huge support on the channel during live stream. Thank you both. Thank you, Conrad Allwood says, thanks for the Senator Warren joke. It was a doozy. All right, 5928 Tri says housing won't come down for years, and yes, you are correct. That's the biggest problem. He meant whoa CPI data. Let's hit it up first. All right, here's the deal. Housing is still way too hot. Shelter is way too hot. Food, okay. Used cars, okay. New cars starting to come down. Okay, cool. But the problem is this, and I'll read the statement. We'll go over some numbers, and we're going to talk about Jerome Powell. We're going to talk about some pumps and dumps. We're going to talk about some predictions for when the markets can pivot, all right? The index for shelter continued to rise in November, offsetting a decline in the gasoline index. The energy index fell 2.3%. We also have the index for all items less food and energy rose 3% in November. We went through some of the specifics. What's really cool about this is you can click on any one of these and you can see what we're looking at. All right, so shelter was high. Transportation services high. We could check on food, all right? Food away from home. We're talking about like fast food and that kind of stuff. Food servicios. All right, look, cereal, right? Bakery products, still expensive. Other food at home, still up there. Non-alcoholic beverages, stuff. Look at this, though. Dairy's gone down. That's cool. That is very cool to see that dairy has gone down. Remember, you could drill into all of this data. You could even drill into energy where you can see the big thing. Now, check this out. Said in that sheet that I showed you, right? That housing offset all this juicy energy. That's how strong that housing number was. It offset all of that juicy energy. Now, when we look at the numbers, this is what it looks like right here. Okay, we flattened out quite a bit, which is not what we wanted. We wanted this to kind of come straight down. So, CPI data is going to lead into Jerome Powell, the Fed, and central banks across the globe taking cues from the Fed. So, what's going to happen now is Jerome's going to look at the data and he's going to go, look, I'm not going to fuck up everyone's Christmas, all right? He's like, I'm going to talk mean. He is. Seriously, this is, I don't know if this is like safe word territory, to be honest with you. Like, if you have a safe word, everyone should have a safe word, okay? Please, can we be safe and have a safe word? But I don't know if this is safe word territory. He might twist our arm a bit because he is. He's going to try to be like really, I'm gonna raise rates again if I got to, and I'm gonna choke you down, and he's gonna try to kind of like get the market to be like, look, inflation, whoa, don't make me hit you again, don't make me slap another 25 on you, all right? And safe word is like, oh my gosh, asparagus, and that's when Jerome drops a 50, and I'm like, no, please don't. It's not gonna happen. He's gonna pause, okay? We're gonna have a decent Christmas. Now let's go to some of the odds and percentages, okay? 98.4%, and let me refresh it after the data release because it should be the same. There we go, 98.4%. All right, so 98.4% chance that the Fed is going to take a pause. Now, you go to the January contract. This is where things still look the same, but you get some optimism built in, okay? Watch what happens, though, in March. All of a sudden, that 94 drops down to 53, and you almost have a 50% chance of the Fed dropping rates then. The problem is if housing stays hot, and this is the problem, housing is not going down, all right? So 5928 Trice, all right, talking about a caprice on 24s, or like 16-inch wire wheel Daytons. Anyways, talking about housing won't come down for years is spot on. That's why I had to give it like super like action on this comment, because it's so true. Housing is not going to come down, and that's the problem. The index for shelter continued to rise in November, offsetting a decline in the gasoline index. The energy index fell 2.3% over the month. I mean, like, it's crazy. Housing is not coming down. And so the other thing, too, is look, food is still up with housing. So that's really crushing, like, the pocketbooks of, like, everyday people. And when it comes to crypto, no wonder we've got pumps and dumps. No wonder when we zoom in here, we see, oh, look, another one right here. And what I like to do is to go to the 15-minute. This is why, right? Couldn't hold 70, and then look, couldn't hold 65, just done. Pumps and dumps. No, everyone's taking profits. No one is like hodling right now. It's crazy, and it's not just crypto. It's there. People are moving into gold and silver. We talked about it too. Silver, right? Hit that big run. Look at that. Hit that big run here. Got up to 25.93. Now we're sitting at 23.01. So the pumps and dumps are coming from all over. So Jerome Powell and the Fed gonna look at this and gonna be like, okay, this is not good. We want this to go down further. Let's look at the 5-year real quick so you can see what I'm talking about. See how we went down nice and quick right here, and then all of a sudden we went sideways like this? That kind of sucks. All right? That does. That kind of sucks, okay? And what's really scary about that is if this sideways action right here continues a little bit more like this, then the numbers are going to sway even further, because if housing doesn't get in line, and if we can't get some price relief with shelter-based items along with food-based items over this winter, we're going to be going into spring with now another season of demand. The problem is the supply isn't there. The cost is extremely high through the roof for all that kind of stuff. And if food keeps choking people, it's just going to be a mess for personal finance. So the Fed then has to think about, okay, well, wait a minute. If we drop another quarter, is that going to then squash the market? And the reason why housing is staying high has to do with private equity groups. Okay, these private equity groups were getting Fed fund rate money way back when things were cheap. All right, when the Fed fund rate was when you go to the Fed fund rate, I mean, we're talking low. And when we did the last calculation, we were talking about in the live stream, the last calculation had it where somewhere like mid-2024 to third quarter of 2024 is when these private equity groups would start be tapping into money that was in a higher percentage range, right? Instead of that 525 to 550, they would start tapping into stuff, in the 300 range when they were starting to acquire capital then. So you could see it. And if they're trying to acquire capital now, holy crap, is it way more expensive? Because look at this, 500 basis points versus what they were getting. I mean, money was basically free. I mean, it was crazy. 0 to a quarter basis points. Ooh, making money left and right. It's when you expand businesses. That's why you saw these growth industries just take off, but then just debt crushed them. So Jerome Powell, he's going to be rough. I don't think it's safe word territory. It's pumps and dumps time. I love or hate crypto all you want. Love or hate how you receive the news that I broadcast you, because I really try to broadcast the news, not like, oh, hype, buy, sell, no, none of that shit. News, information. XRP couldn't hold 70 cents. Next crucial point, holy crap, 65, couldn't hold it. Tried right here, right? Made that rebound and then boom, done. Broke right through that damn thing. Pumps and dumps, nothing's lasting. I mean, if you're hodling right now for 2 years, you're still in the way loss. That sucks. In the 1 year, you're not too bad, because remember, you were chiming through late 2022, and that was FTX time. So thank God we're at least higher than that. Okay. XLM, I mean, it's supply and demand. I don't know what else you want me to say. It's supply and demand. People can say all they want about there's trillions on the sideline, and when they flip the switch and all this, whatever. It's 12.2 cents right now. That is what it costs to buy it. No matter how much money is on the sideline, no matter how much money is getting ready to go in the market, no matter how much money goes in and out of the market, it is the price of 12.2. It doesn't matter. It's not like magically one day trillions just pop into the market and it's like, oh, this is amazing. It's raining money at the strip club. Thought I wasn't going to sing today. But remember, it's not raining money at the strip club, because when you look at the rate, I mean, 525 to 550. Ooh, you're not throwing that kind of money. Or maybe okay, maybe a couple singles. Okay, maybe some fives. Okay, if it's 10, if it's good. But dude, you're not making it rain crazy anymore, because just the money is too expensive. So it's when you hear that narrative of trillions on the sideline, and again, if you don't know what I'm talking about, this has to do with the live stream. Watch the live stream, just listen to it. It was great. There's 2 parts to it. I'll have both videos linked at the end of this, okay? So when you see it, you're like, okay, trillions on the sideline. It doesn't just magically show up. You don't just magically free open everything like a floodgates. Now it goes. And then think, and if you did, it ain't all going in one basket. Who in their right mind puts all their eggs in one basket? You're going to see some money go to some real estate. You would see some money go to some banks. You would see some money go into other investments, maybe land speculation. Maybe there's investments in corporate stuff. Tons of stuff. Maybe they want some bond action. Maybe they want some short-term treasuries and securities. I don't freaking know. But the money doesn't then go, oh, let's just go all into crypto. Guys, it's 12.2 cents. Supply and demand. It's pumps and dumps. People are playing it, and they're playing it on the percentages. And what's interesting about crypto is the volatility is what makes it juicy and interesting. It's just when you look at this, you got to be like, man, I got to make sure that my expectations are lined up. Because look at this. I mean, this is just, it's cool. It's better than where we were last year, which I'm happy about, which is why it's following the macros. You're seeing crypto go up as we start pricing in cheaper future BPS Fed fund rates. So that's why macros matter. Fed fund rate, macroeconomics, man, it's what rules the roost right now. It's what rules the roost with every investment. It doesn't matter if it's luxury cars, boats, real estate, land speculation, precious metals, commodity. It does not matter. It's all based on supply and demand. And on the side of that supply and demand, you have to think about what is the availability of money and how much is that money? How expensive is it to take those kinds of risks? When we look at the Fed fund rate right now, sitting at 5.25 to 5.50, that's very expensive for recent history. Very expensive for recent history. In acquiring money at that rate, right? Borrowing money at that rate is nuts. And expenses are very high, right? Personal expenses are very high. PPI stuff. Hey, let's you want to talk about high? There you go. I mean, the last report was crazy. It was high. I mean, we pass it on to the consumer. That's no wonder CPI data isn't going down because they're passing the stuff on. So I wanted to tie this all together in a big macroeconomic event sort of way and share with everyone that like the crypto floor is definitely moving along with macros. There is no doubt about that. The less pressure we get from high central bank Fed fund rates, and this is global too, right? Just don't apply to the United States. This is global. As long as we have those high rates and they come down, you're going to see the base floor of crypto go up because it's just going to be cheaper to play in the risky pool. Now, if you want further explanation of what is going on, check out the live streams. It's broken down into 2 segments because there was a very naughty joke that I told, and it was so good that Conrad Allwood gave a super chat to the channel. Thank you, Conrad. But yeah, funny. Check out those 2 live streams. It'll give you all the information you need. Good, easy listen. Catch you cool cats later.